Let me say that we have got, as you say, a terrific panel. We've got Joe Timon from YouGov, and he will talk to the study that YouGov did for the QCA. We have Rebecca Emerson, head of UK from Oliver Wyman, and I look at her academic background and I think you can't get better than MIT and Oxford, and Sid Chandlal from Hargreaves Hale. Now, I looked up Sid Chandlal on Wikipedia, and the family is absolutely fascinating. It's the princely states of pre-independence India, the scion of that. But this is a really interesting and really important issue. I really don't want to say very much. I could talk forever on this subject, but I want to make, I think, just 3 or 4 points very quickly. First of all, if the UK votes to leave the European Union on the 23rd, what will happen? The short answer is that nothing will happen. The sun will come up the next day. We will remain a member of the European Union with all the rights and obligations pertaining thereto. The same directives will apply, the same regulations will apply. The procedure for exit, and I'm sure you're all aware of this, but let me push it home, is enshrined in the Treaties of European Union under Article 50, subparagraphs 2 and 3. There is a clock, and that clock starts ticking when the government of the day submits its application to leave. It is not under any obligation, moral or political, to submit that application until it has all its ducks in a row, until it's set up negotiating groups, until it's set up groups that will determine what the preferred position is. That could take months, it could take years. And it is very likely that the Prime Minister who actually submits the application will not be the Prime Minister we have at the present time. So I think that nothing really will change for quite a long time. Secondly, anybody who says, and there are people in the Leave campaign who say there will be no disruption, anybody who says there will be no disruption is crazy. Not because of what's going to go on in the foreign exchange markets. I've looked at that for foreign exchange markets for the last 20 or 30 years. And it's quite clear that they go up, they go down. Volatility might increase because everyone likes more volatility. But whether Brexit is good or bad for sterling is something that only God knows, and he might not. But I do think that in the short term, and perhaps in the medium term, investment decisions will be delayed. This is both foreign investors and domestic investors. I don't think you can get around that. It is a trade-off between the certainty of short-term disruption and, as far as the Brexiteers are concerned, the possibility of long-term benefits in a much higher growth world where we align ourselves with Asia, Latin America, North America. The third thing is that the rump EU could, if it wished, discriminate against the UK. I think there's no doubt of that. Some of the Brexiteers will simply point to the large trade deficit that we run with continental Europe and say it would not be in their best interests. Clearly, it would not be in their best interests to discriminate against the UK, but they could. There is no doubt of that. They could. They could, particularly in the financial services sector, restrict access to clearing and settlement, restrict access to Target 2S. There are various things that could go on through the ECB. The fourth thing I want to make, fourth point that I want to make, is that the cleavages that have been opened up within the UK polity by this debate are the deepest that I have seen in my long life and long looking at British politics. The cleavages, I think, will not close up no matter what the result of the referendum is. These are deep, they are lasting, they will poison British politics for the next generation. And the last thing that I want to say is that I don't think it will happen. I am fairly robust in my views about Europe, but I'm pretty sure that come the day, it will be 55-45. And the reason is because we did a study last year called The City and Brexit, where we actually did look at 650 city folk. And what fascinated me, I wasn't surprised that about 65% of the people voted just as you have voted to stay in. What fascinated me was the age split. Anybody under 40 is pro-European, almost anybody under 40 is pro-European. Over 40, people are a bit more skeptical. But I noticed this. We run a young economist dining group, and 2 or 3 years ago, Nigel Farage came to it. And I thought he did okay. He only went out for a cigarette twice. And by and large, he answered all the questions and, was a pretty good bloke. But he got a really hard time from these guys. And at the end of it, I said, look, you've given Mr. Farage really quite a rough time. Let me ask you something. If you could take a year off of your career and you had a choice, this wouldn't in any way damage your career. You could have a year in Paris or a year in Sydney. Which would you take? And I thought 80% would say Sydney, 80% said Paris. And I realized that what we have now is a generation of good Europeans. Some of us, in the, shall we say, more robust camp, are split. There are undoubtedly Little Englanders. There are also globalists. But in the Remain camp, you're good Europeans. And I think that that will come through. But I want just finally to say one thing. I write a little bit on economics, and I have a very small but rather select audience. And I've written on Brexit. And I went to a drinks party a few weeks ago where one of my readers was there, and I didn't know, but he was an ex-ambassador. And he came up to me, and he took his finger, and he prodded me in the chest like that. And he said, I think your views on Europe are disgusting. No, they could be wrong, but they're not disgusting. But that's the depth of the feeling that we have on this issue now. And that's why I think it is toxic, and it is going to change the tone of British politics for quite a long time. And I want to close simply by putting on the table one possibility. The possibility is that, let's say we did actually vote to leave. Okay? We vote to leave, there's going to be ructions within the Conservative Party. I know we have a fixed election schedule now, but it is very possible that the result could be a general election. And if there were a general election, given the splits within the Tory party, given that pro-European Tories would have really great reluctance to vote for the Tory party, I could see them voting for the Lib Dems. And I could see emerging out of it a Lib Dem Labour coalition, which would be committed to stay in Europe almost immediately after a national referendum which voted to leave Europe. And I think that's a fascinating constitutional issue that I just simply put on the table. But I'm going to come back to our panel and Joe and Rebecca and Sid. Joe gets to go first. Each of our speakers will talk for 10, 15 minutes, and then we'll open it up to as lively a debate as we possibly can. But I give you Joe Twyman from YouGov, who knows everything about this kind of thing.
My name's Joe. I'm a pollster. And I haven't given a presentation on Brexit in 14 hours. I'm here today to talk about what I have characterised as my uncertainty is bigger than yours. Public opinion and the EU referendum. And I want to link this back, not just to public opinion, but also the opinion of businesses and everything else from the data that we have collected on all the surveys that we've done. I want to talk about whether we're going to leave the EU or not. But here's a spoiler, I don't know for sure. So I'm afraid that if you're looking for, advice and recommendations, I can't say for sure. What I can say is that at the moment, public opinion is very different from the opinion of businesses, from the opinion of senior managers, etc., whereas they, generally speaking, favour remaining in Europe, it's far closer among the general public. Distill that down to just the referendum itself, that leave or remain question, 51-49. Statistically, a dead heat. Now, it's worth pointing out, and I think I'm legally obliged after last year, to remind you that polls are only ever a snapshot of public opinion at the current time, and they all, no matter how good, have a margin of error associated with them. And so this is where we are at the moment, neck and neck, But how do things break down in terms of specific groups? Well, when we look at all of the different groups within society, you can see here's a key finding: Guardian readers favour leaving. That would be a headline. Favour remaining in the EU, as do independent readers, Green voters, Lib Dem voters, etc., etc., etc. These are all the groups that heavily favour staying. These are the groups that broadly favour staying. You'll notice men and women, they're not really much of a division, not least compared to, for instance, the age difference that was mentioned. And generally speaking, as I say, business people, senior managers, quoted companies fall into this group. But then we have the people that wish to leave. Older people, 50 to 59, lower social grades, people with fewer educational qualifications. And then the people that really strongly want to leave. People who voted UKIP at the last election. Now you may think, well, hang on, 28% of people who voted UKIP at the last election wish to remain in the EU? Yes, because even for UKIP, it's not always about Europe, but I could talk for that for many more than 10 minutes. And so there are various different groups in society that favour various different groups that oppose. And the country is divided along so many lines: age, education, region, employment, class. All of these are big dividers. And each one of those groups will respond in different ways, which makes this business so uncertain. But it's not just about these separate groups, it's about different countries. When you break all of that data down, and this is an experiment we did back in May when it was neck and neck but slightly in another direction, you can see that all the regional data looks like this. Now I should say the data for Northern Ireland is taken from a company called Lucid Talk, not from YouGov, because YouGov don't poll in Northern Ireland. That is the only poll that I could find in Northern Ireland. So it is simultaneously the best and the worst data we have on Northern Ireland. But the theme is generally true. We see a situation where Scotland and Northern Ireland overwhelmingly favour. Wales and England, it's very close. When we look at how that breaks down in terms of proportion of the votes, we see that Scotland and Northern Ireland, if it is very close in England and Wales, have the potential to block England leaving. It needs to be about a 4-point gap. If Scotland blocks England, what does that lead to? Well, supposedly a constitutional crisis. It might, we don't know. But that kind of uncertainty is deeply problematic for all of us, but not least for companies operating in the economy. And then what are the important issues? What are the important issues that are important to people generally? It's about the economy and it's about sovereignty. And then immigration coming third. And this divides by the different groups. Overwhelmingly, of course, business people, quoted companies, favour the economy as their reason. And that comes out through all the polling that we've done. Which one of these will be important? Most important? I imagine, historical precedent states, that it'll be the economy. That when it comes down to it, not now, not next week, but on the 23rd of June, it'll be the economy that comes through for most people. And if you look at support historically for the European Union, this goes back all the way to 2004, you can see the only sustained period of disapproval for the economy, disapproval for the European Union, was during the sovereign debt crisis. And so the economy is hugely important, generally speaking, but I think it will be growing in importance over the next few weeks. Yes, people are dissatisfied with immigration. Yes, people are disappointed with sovereignty. But are they so disappointed? And are they so upset that they are willing to take the risk? One of the things that comes through all of the data we've looked at is that people think it's a risk to leave the European Union, and the proportion who think it's a risk is significantly higher among companies and businesses. But when you ask people, is the country going to be better or worse off? we can see that actually, recently, the picture has become more confused. The Leave campaign is not trying to win the economic argument, to my mind, it is trying to neutralise it. It is trying to get to the stage where people don't really know. At the moment, around 1 in 5, 1 in 6 people doesn't know which way they're going to vote. And that is linked, at least in part for some people, to this. You can see the proportion of people who think they're going to be worse off has actually fallen over the campaign. Whereas the people who don't know, or the people who make, specifically the people who think it will make no difference, has increased. And what about this? Do you personally think it would be better or worse off if we left the European Union? The figure who say don't, the percentage of people who say it will make no difference has increased. It could be that come polling day, a proportion of people say, well, actually, it won't make a difference to me whether I'm better or worse off if we leave the European Union. So therefore, I have a free hit. I can measure, I can explain, I can shout my dissatisfaction, my disapproval, my distrust of politics, of immigration, of the European Union. I can do that through the ballot box. What will it all come down to, I think? Turnout. Whether we leave or stay will be determined not only by the direction in which people vote, but by the proportion of people who actually decide to vote. Whether people vote or not is an important second dimension. And here's what it looks like if you simulate turnout going from the minimum to the maximum. It's very difficult to say exactly what this means in figures because we don't really know what turnout will be. If it's 30% in line with local elections, we'll probably vote to leave. If it's 60% in line with general elections, we'll probably vote to stay. I estimate it'll probably be between 50 and 60%, but that depends on the campaigns. And as you can see, it's not even linear. Why is it not linear? Here's a chart for you. It's incredibly complicated. On the left, those different groups that I talked about at the beginning, and their support for leaving, and their support for staying. At the very top, those that wish to stay. At the very bottom, those that wish to leave, ranked. So Labour supporters in this, the most likely to say they wish to stay. And on the right, turnout. You don't really need to see all of the different groups. All you need to see is the fact that the lines go everywhere. Some groups that favour Remain are very likely to vote, others less so, and vice versa. It's all very complicated. But I wish to leave you very quickly with a bit of advice and recommendation. I hope I won't be arrested. And it's about the polls. There's a lot of polling out at the moment, covering all sorts of issues to do with the European Union. And we've pretty much decided on which position we're going to take on the question of where we vote, but we haven't taken a position as an industry on how to measure turnout. Lots of people are doing it lots of different ways. We think the way we're doing it is best, so does everyone else. That is an important second dimension, and it can bring in a lot of uncertainty. So, ask yourself, whenever you look at polls, whenever you look at data, who commissioned the polling, who's asking the questions, what questions are they asking, how are they asking the questions, when are they asking the questions, who's answering the questions, how's the data being analysed, how are the results being reported? All of these could have an impact on their accuracy, and they're only ever a snapshot of opinion at the time. What do I actually think will happen? Historical precedent states that we'll see a move towards leave because it's new and exciting, and then a move back towards the status quo. That's what happened in Scotland, that's what happened in Quebec. So historical precedent states that we will probably vote to stay. That will be the same historical precedent that stated that Jeremy Corbyn could never become a leader, or that Donald Trump could never become the Republican nominee. Politics is changing a lot. We've got 2 weeks left, and it depends very much on the campaign. If Remain are going to win, they need to get young people and Labour supporters to turn out. We'll have to see if that happens. I'm going to sit back down and hand over to the others now, but if you'd like more information on this, please contact me.
Well, look, we really are a bit time pressed, but if there is a couple of questions perhaps just to the technical aspects of the polling. Does anybody have any questions on the polling itself? In that case, Rebecca. Thank you, Joe. Rebecca Emerson from Oliver Wyman. Thank you, that's terrific.
Thanks, Andrew. I think what I liked about your talk, or your introduction, was that not only did you say that you were trying to predict the British polls, which was the fact that we would stay, but you made the prediction that the sun would come out on the 24th of June. So predicting the British weather, I think, is even harder than predicting politics in this country. So I'm going to stay away from numbers and polls and bamboozling you with figures in spite of having an economics background. I'm going to just talk about what my view is that the possibility of leaving the UK the possibility of the UK leaving the EU would mean for quoted companies. But I'm going to divide my remarks into three parts: the potential hit on clients, the impact on suppliers or the supply chain of quoted companies, and lastly, the access to finance, because we are in the city after all. But I also want to just put out there and keep in mind that there will be short and medium-term uncertainty, which is always bad for business, while the longer-term environment is yet to be determined, and that's what all the arguments have been over in the press and on the airwaves. So firstly, obviously, a Brexit vote would affect your clients, which are importing or exporting goods, or if you're doing such. But most importantly, you might actually be supplying clients who are export-focused, or at least receive a good deal of their revenue from export. But I think the bigger impact will actually be on the suppliers in the supply chain of quoted companies. When I set up to look at what's going to be the impact of Brexit on my company, on Oliver Wyman, here in the UK, our biggest worry, after having 5 management consulting partners putting their heads on this, so rather an expensive project, I would say, our biggest worry in the immediate aftermath of an exit vote was going to be the ability of our staff to move effortlessly around in and out of the UK and around the rest of the EU and vice versa. Because in short, we're a people business. And every week, consultants fly from the UK to serve European clients, and European consultants fly into the UK to serve British clients. And let me tell you, our consultants actually like this international experience. I think it goes back to what Andrew was saying, that his young economist group really feel quite European. Now, the Leave campaign has stated that immigration is top of their list and will be one of the first things that they would adjust, if I can put it that way. So the potential for visas or working permits, if I need to send my staff over to Europe, because right now, if our British staff go to Switzerland, for example, to be on projects in Switzerland, I actually have to get them visa. That's actually going to cost us money. I don't think we're going to be the only supplier to be hit as such. There's going to be other suppliers who will need to consider in the longer term whether they will need an additional UK base because they're now based on the continent, or an EU base if they're currently based in the UK but want to more effortlessly move around the European Union. And in the longer term, if the UK and EU terms of trade are not established on the same basis, then any suppliers outside the UK will have higher costs than now. And one key supply, which will hit all of us, and I mean quoted companies and also those of us that pay our bills every month, is the cost of energy. The UK is a net importer of power via the French and Dutch interconnectors. The connectors are currently contributing to a record 7.5% of our electricity demand, with 2 additional interconnectors in development. Similarly, the UK imports up to 15% of its gas requirement via Belgium and Dutch links, though I'll be honest with you, flows are often reversed dependent on market conditions. Lengthy negotiations over new agreements could threaten the security of these supplies, or at least provide an increase in price for all of us, as well as threaten potentially the new interconnections and pipes being built under the channel in the North Sea. So net, the cost would go up. Now lastly, let me touch on a key aspect of the exam question we were handed today, the part about quoted companies. Previous Oliver Wyman work for the City UK has concluded that since the advent of the UK single market, unification of financial services, rulemaking in Europe has advantaged the UK as a financial center. Through the single market, the advantages the UK has accumulated are many and include the language and legal environment, because Europe does speak English, talent pool and labor force mobility, quite an attractive tax environment that we have here, and the professional services ecosystem, each sector which significantly contributes to the UK economy. This includes legal, accounting, IT, advisory services, educational and training services, and generally our quality of life. These benefit everyone and all the companies. And then also looking at the access to finance for quoted companies, you rely on external financing. At the moment, 62% of holdings of quoted shares in UK domiciled companies are from outside the UK. Sorry, outside the EU. Outside EU and outside UK. In terms of bank financing, there's both EU-based and non-EU-based banks offering loans and working capital to UK-based companies, so companies like yourselves. So the question is, how much will the departure affect this access to finance? In short term, in the immediate aftermath of an exit vote, if it were to happen, the non-EU banks will on the whole be looking to establish a non-UK base and shrinking their commitment to the UK, since the UK base no longer offers effortless passporting into the rest of the EU, and the EU banks will be determining their appetite to establish a UK subsidiary or waiting to hear if they need to. This uncertainty will most likely lead to at least a short-term withdrawal of their balance sheet while the smoke clears. And on a longer-term basis, we know from working with our clients, the non-EU ones will be withdrawing their balance sheet on a more permanent basis, and indeed, they've actually told us that their employment will be hit in the UK between 10 and 35%. So just so I can take a bit of a more balanced view, because clearly my views have been quite negative for if there would be an exit vote. There could be two potential benefits for quoted companies. There could be the redeployment of some of the monies going to the EU, although the amount is currently a topic of fierce debate. And secondly, it does give us a bit more leeway to make our own regulations and laws, although honestly, at least when we look at financial regulation, the UK has been taken the most strict interpretation of most of the jurisdictions out there. So my view is that on a net basis, if the UK were to vote to leave, it would have a negative net impact on quoted companies.
In order that we do have some time for questions, I think we move straight to Sid Chandlal. Sorry.
Good morning. Thank you very much, Andrew. I think just to put in perspective the title, Growth in Troubled Times, as an income manager, if I may, I'm going to try and focus that on growth in income in troubled times, or indeed in the event of a Brexit. Some of the issues touched upon earlier, I completely echo the thoughts. In particular, currency, that's something we're increasingly sensitive towards, I think. Looking at some of our companies, what we find is, certainly if you take the assumption that sterling is weaker, what can you do to try and ensure that, as a portfolio manager, your dividends are still at least the same, if not better? One way is to look at exporters. I think of a company like Victrex, 97% of its product is exported. But then the relationship isn't actually that simple. It isn't as easy as saying, oh, well, great, it exports its product, so therefore it's going to get greater revenue in sterling, because actually the relationship is not a static one. It is dynamic. You look at averages over the year, and you find that, okay, in theory, if sterling is weaker against both the dollar and the euro, or in this particular case where the revenues might come in that format, then there could potentially be a tailwind as and when it reports its results. Then I look at a company like ACAL, Malcolm, I didn't know you were going to be here, reported recently that in the year to March, there was a 7% potential hit or there has been a sensitivity where the impact has been 7% on earnings, approximately. And that's pretty much the same as the difference between actually sterling versus the Nordic currencies and the euro on average, where in fact sterling has strengthened. So you may take the view that actually, is it that the currency is going to get weaker or is it going to get stronger? And if so, against which particular currency? Because it's so easy to generalize and say sterling is weaker. Is that against the dollar, the euro, Nordic currencies, or something else? But generally speaking, I would say that companies like ACAL, Victrex, if indeed the currency impact was such that their revenues are getting stronger in the translation, and indeed even in actual transaction terms, and you strip out the impact of perhaps a little bit of hedging and forward planning that actually you would expect the finance directors to look into, then there is a potential benefit, but that's all it is. And so often with any stock, it isn't just one variable that will have the ultimate impact, but given the topic of the conference, that's one element anyway. And you take it as a given that we will be looking for companies with good balance sheets and strong free cash flow and the ability to pay sustainable dividends and dominant franchises and so on. On the point of utilities, very interesting actually that there is that reverse. So instead of benefiting from earning in a stronger currency, you might actually lose out because you have to purchase in a weaker currency. And there are ways, I think, even within that space to potentially outperform. There are businesses like Telecom Plus, for instance, where, strangely enough, they somehow do slightly better when energy prices are higher, or indeed they can actually offer you something different where they bundle more than one service. So that makes it different to, say, the more traditional larger utility like EDF, where you find that all they can offer you is gas and electricity. Telecom Plus will try and offer you the mobile offering, the broadband, and the more services you take, the cheaper your entire bill gets. So you get the discount as a result of that. It makes it a stickier customer and so on. And then I look at a water company like Pennon, where perhaps there's a little bit more of a self-help strategy going on and a bit of an evolution where indeed the old recycling business is one thing on Viridor, but certainly they have energy to waste, they have an increasing ability to buy into smaller water companies, and that slightly changes the mix of revenue as well. But maybe something more defensive or boring is actually a good thing in such an environment, and we don't shy away from that. They talk about their dividends growing at least in line with inflation, which again is growth. So, and then another aspect is to look at supply-demand bottlenecks. The housing market is a favorite topic here, or anywhere, certainly in Britain, but there's so much noise around it. One, as an income seeker, has to look at something where it might be slightly different. So if you take the premise that actually there is a general shortage in housing, certainly within certain segments within that, there's an even more acute shortage. When I look at a business like McCarthy & Stone, that's a specialist developer for retirement homes, and what they say is that there's an estimated 900,000 unit shortage for such properties in the UK. They have a 70% market share, and all they can try and do at best is something like 3,000 units a year. So that bottleneck isn't going to sort out anytime soon. And again, I think that sadly sometimes will get lumped in with all the other house builders as well, but it may well continue to do well irrespective. Speaking of which, I'm actually a bull of the house builders. I think they will continue to do well, even if you do see a short-term correction in the share prices. They have much better balance sheets than they have done for some time, and certainly the cash flows and the dividend profiles are more attractive now than it has been for a long time. And finally, I think maybe the value retailers. We hear a lot about maybe the likes of the general merchandise, without naming names, suppliers who suffer and have been suffering, whether it be for weather or lack of footfall or something else. But I do think something like a Greggs, for instance, where there may still be a market for a sausage roll if there is Brexit, will continue to do well. But that's really all I wanted to say. But I'll hand you back.
Okay,
Andrew.
well, look, that's
Thank you
great.
very much.
The important thing is that we get this as interactive as possible, as quickly as possible. Questions from the floor. If you don't have them immediately, I would very much like to ask each of our panelists the same question. Pick the two biggest risks for the smaller quoted company sector of a vote to leave. First of all, Joe, what would you say?
I think a vote to leave will lead to, well, let me play out a possible scenario and where the risks play into that. I think a vote to leave will mean that David Cameron resigns virtually immediately. Whether he goes in the morning or the afternoon will be decided, but it would certainly be very quickly. That would mean that he would be replaced by someone who had supported leave, which means either Boris or Michael Gove. They, fearing the uncertainty
David Davis.
They, fearing the uncertainty around the leave, would call an election as fast as possible in order to ensure that they didn't make the mistake Gordon Brown made. That would then mean riding over the Fixed-Term Parliament Act, but Labour would agree to that because they would think they could win. They wouldn't. The Conservatives would win. Jeremy Corbyn would then resign, and so we'd have a general election and two leadership elections by the end of the year. And I think that means a lot of uncertainty. I think that means a massive amount of disruption. I think it means nothing actually getting done in terms of the business of government. And I think that has the potential, if that scenario plays out, and it's just a suggestion that happens to be right, if that scenario plays out, then the effects on quoted companies could be enormous.
What would they be? I mean, it just, that's the point. We have
Enormous,
uncertainty.
I've just said.
Yes. But, political uncertainty is one thing. How does it impact on these companies?
Because it means their ability to make decisions based around the things that the European Union is involved in. For instance, regulation. For instance, cross-border trade, tariffs, all that sort of
But you would accept that nothing changes. We're still a member of the European Union. We're still bound by all the directives and all the regulations until 2 years after we have submitted our application.
For 2 years. But you want, as a business, you want to plan ahead. And it's very difficult to do that if not only do you have a 2-year fixed term, but also the people negotiating, or meant to be negotiating that, meant to be making deals, are the ones arguing about who's going to be leader in their party and who's going to win a general election.
And of course, at every breakfast table around the country, people are killing each other. No, this is a toxic issue at the level of, it's splitting families, it's splitting communities, and it will obviously split companies as well. Rebecca.
Well, I'm going to take a slightly different stance. So your stance was the fact that we're going to be hit by all this uncertainty because the politicians will be paralyzed. I guess my hypothesis is, you were saying the business of government would get done. I would say the politicians can keep fighting. They don't do anything anyway. The civil servants will keep going. But I would still argue that the economic and business uncertainty would be great, because although you were saying that it will take a few years to renegotiate, I think that the way that the business people both here and outside the UK will see what's happened, they'll see the political situation, and they'll say, I'm not sure about how much I want to do business there. I'm not sure how difficult it's going to be to do business there. Do I want to? And I think I'll just wait. So I think that the uncertainty will have mainly an economic impact, because I'll let the politicians go on, and maybe they make more money for the broadcasters and the pollsters.
And the pollsters, yes. Of
course, pollsters win. So I think the uncertainty would be bad for business. I think it's going to be harder for the exports. I will disagree with you slightly, where having seen what's happened with some of the Schengen border countries during the refugee crisis, where they immediately said, well, I'm not paying attention to the Schengen agreement, I want to see everyone's passports when they hit certain borders. I'm still fearful, and also based on what I've heard from some Leave campaigners, including John Redwood, that the border controls will come down very quickly, or the need for visas. So that my fear is still, in the short term, the economic uncertainty means less business will be done, slightly less, not lots, and that the difficulty to move staff around for midterm assignments where you'll not just need your passport to visit, but if you're going to spend a week or two there, quote, working.
I'm not sure what you're saying there. You're saying that you think that within the European Union, where at the present time you have completely visa-free travel,
Yes.
whether or not you need a passport, within the European Union, UK citizens would require a visa
Not to
before
visit,
we
but
have actually
potentially-
exited.
No, before we've actually exited. So very much like Switzerland now, where if I want to go have some of my staff work there on a project for a month or two, they need a visa.
But how would that work, given that that would require a treaty change, would it not?
But that was what you would say about the Schengen countries, which brought down their borders. You would have thought that would have required some sort of repeal of the Schengen Borders Agreement, but they didn't. With the refugee crisis, Austria suddenly said, I want to see passports when you come in here,
Right.
which is a complete change.
Okay, I mean, I think that's really fundamental.
Yeah.
If that were to happen within the European Union before the UK had exited, it would be a huge, huge change. Sid, what do you see as the biggest
I
risk?
think we see it in asset outflows. To a certain extent, that's already started. And if you think that the market is good at pricing things in, then certainly to a certain extent that's happening now. You see it in the financials and the asset managers. They're not necessarily getting big outflows across the board, but you do start initially by seeing fewer inflows, net inflows. And again, without taking names, so that's a bit unfair on those companies. That is very much the report. I would expect you'll get a quarter where, in fact, there's been a delay in decision making, so effectively nothing happens. And the other aspect, I think, on the staffing issue is some of the recruiters will suffer because there's greater uncertainty. You don't actually know whether it's going to be permanent staff or temporary staff. And a third sector that could get impacted is the insurance sector, where effectively they have, I think, a reliance of 14% of the reinsurance is underwritten from Europe. So if there's no passporting, that's a gap. Where's that going to be filled? And there are only so many players that can do it. So you're effectively in a club in that particular sector, and there are only so many businesses that have the know-how. So that's going to be a problem.
Can I ask all three of you, really? I mean, immigration. To what extent are, in your opinion, smaller quoted companies dependent on non-UK labour? Is this going to be a big issue? I mean, in the short term, David Cameron has said that anybody who's here will, as it were, be grandfathered, and the result was very likely to be a surge in immigration immediately after a Brexit vote to get in under the barrier. But to what extent are companies dependent on, in particular, EU labour? Is there do you have a sense of that at YouGov?
I don't think it's possible for me to stress how much I don't know. All I do know is that under the Vienna Convention, you're right, that people who are here at the moment or who come here supposedly during the 2-year negotiation, though that would be up for debate, are then entitled to stay.
I don't have a fixed employment figure, as it were, but my impression is, again, it goes back to kind of the education level, is very, there's quite a reliance on staff, either directly, whether it's their own staff, or indirectly, whether it's from their suppliers. Mm-hmm. So I would think that it wouldn't be positive, if I can put it that way.
According to an article in the FT this morning, it's 2.6 million workers from the EU and the UK currently. So, I mean, I guess there's a question mark there, but you can also take something from HSBC and the likes who are saying that they will move to Paris or move somewhere else. And, yeah,
the fun city of Frankfurt.
Yeah.
Questions around the room? There must be someone, surely. You're not all bludgeoned into submission by these overwhelming things.
Or they're bored by it.
Yep, at the back.
Hi, Ros Snowden from the Yorkshire Post. Andrew, you made some fascinating comments about how a Brexit could poison British politics. If we vote to stay in, do you still think politics would be poisoned?
The answer is yes, I do. I think the damage has been done, and I think this is a real problem for David Cameron going forward, even if he wins. I think the sainted Nadine Dorries, not, I think, perhaps one of the more forward-thinking political philosophers of our age, she did say something very sensible. She said he needs a 60-40 victory to stay in place. I think that politics has... Look, something is going on both sides of the Atlantic and throughout Europe. And there is a sort of realignment of politics. And what this has, in my opinion, exposed in the UK is a whole set of cleavages. This is a terribly academic term, but a whole set of cleavages that were really covered up by this I suppose, bi-party system that we have, Labour and the Conservatives and the Lib Dems somewhere floating in between. There are real cleavages within each of the parties. I think it is astonishing, and I don't think he gets credit for it, how well Jeremy Corbyn has covered up those differences within the Labour Party. You know, there are large parts of continental Europe that believe on the left that the European Union is a capitalist conspiracy. Now here, people on the left seem to think that the European Union is the only guarantee that they have that the Thatcherite revolution isn't going to put them up against the wall and shoot them. It's a kind of bizarre set of new and not necessarily overlapping cleavages. It's going to be a very different political system, a very different political landscape that we have after this vote, whichever way it goes, than we had before. But Joe is the expert.
Yeah, may I add to that? The Conservative membership breaks about 60-40 in favour of leaving. Nadine Dorries hates David Cameron. Those are two important facts that I think feed into this discussion.
But she's not wrong on everything.
No. Not wrong on everything. You're right. And so there's no doubt that the Conservatives will be in great difficulty. It's worth remembering, of course, what happened after the 1975 referendum. That led eventually to Labour splitting and the formation of the SDP. You can plot that very clearly from 75. And so these things can have hugely disruptive effects. I don't think we'll see something along those lines, but the Conservatives will be hugely divided and have massive infighting. The last thing David Cameron wanted at the last election was to be beholden to 10 or 12 UKIP MPs. He is beholden to 10 or 12 UKIP MPs. It just so happens that they were elected as Conservatives. And so that's extraordinarily difficult for him. Jeremy Corbyn has massive problems with the support or lack thereof among the parliamentary party, and so that divides. The Lib Dems, everyone's forgotten about them. They only have 8 MPs, and they're not staging a fight back and have an illiberal Liberal leader. The Greens, the SNP have flown very high and risk the Icarus effect of crashing back down to earth. The point is that across the board, all the parties face one difficulty or another, and some numerous. But because of our electoral system, somebody has to win. Somebody has to win. In the same way that in the States, Hillary Clinton and Donald Trump are both very, very unpopular candidates, but one of them will win. And so the way these things play out is extraordinarily interesting, particularly with regards to what you were talking about, the rise of, to use another academic term, authoritarian populism. This is true across Europe, this is true across America. A rise of people who feel that they have been left behind, that the world has moved on in a way that they are not comfortable with and they did not consent to, who disapprove, who are dissatisfied, who distrust political institutions, politicians, the EU, etc., etc. And so how things develop, both in this country and abroad, in November in the US elections, next year with elections in France and Germany, in this context of rising authoritarian populism, is going to be very uncertain but very interesting. And actually the presidential result in Austria just a couple of weeks ago may actually be seen as the last let-off that the developed world had.
Rebecca.
I'm not sure I'm qualified to comment on politicians or indeed participate in a debate talking about cleavage and cover-up, so I'll pass on that one.
Sid.
Yeah, the same.
Oh, gosh. Any more questions? Yeah,
Sorry, could I just
2
ask
questions there. Sorry, at the back, by the door. That's the one.
Chris Hardy from Arden Partners. I'd like to get back to the question that's on the board, actually, which is what do the panel actually think that it'll make the cost of capital?
Could a little louder if you would, sorry.
Sorry, do the panel believe that the cost of capital will go up for quoted companies if we leave?
Sid, I think that's for you.
Yeah, I think it will actually, because if you assume that risk is effectively a reflection of uncertainty, then your discount rate increases and therefore the value of your cash flows decreases, and that should be reflected in the price, which is lower. Yeah.
Do you want to come in on that, Rebecca?
I would echo that in terms of definitely the cost will go up partly due to uncertainty, but also partly due to withdrawal of banks' balance sheet if you're talking about bank financing.
There
So
was somebody in
scarcity.
front. Yeah, there.
Would John Goodwin, Goodwin PLC, would the panel like to comment on what might happen to the control and rules for the London Stock Exchange if we left?
Rebecca or Sid?
I'm not sure I can help you with that one, sorry.
Yeah, likewise.
I can make a more general point about rules and regulations across the board when it comes to these negotiations. A lot of debate has been along the lines, particularly from the Leave campaign, that are basically predicated on the idea that politicians will behave rationally, that politicians, both in Britain but particularly in Europe, will be rational, and that well, all this trade goes to Europe, so therefore Europe will have to effectively be nice to us. And yes, that is the rational approach. Unfortunately, there is no guarantee that politicians will behave rationally, whether it refers to how the stock exchange relates to the rest of Europe or anything else. Particularly, as I mentioned, with elections in France and Germany next year, politicians may not behave rationally. They may behave vindictively in an attempt to demonstrate to their own voters that actually leaving the European Union is the worst possible option and something that should not be countenanced under any circumstances. And so will that necessarily happen? No, but the point is we don't know. And the idea and the assumption that politicians, when it comes to any such discussions, will behave rationally is not necessarily borne out in evidence.
I wouldn't disagree with what you're saying. Each of these countries on the continent has its own problems. The Dutch have to smack Geert Wilders down. Renzi has to smack Five Star down. There is this, as you say, rise of authoritarian populism that the elites of Europe really don't want to see succeed. But of course, over time, because the negotiations will actually not start immediately and they will take place over a prolonged period, one might make the assumption that rationality over time will trump will overcome irrationality. One final question. I know we've run over, but then we started late. There, at that table. Last question.
Yeah, my name's Donald Stewart. I'm the chair of a small AIM-listed company that's involved in the tech sector. And my question, particularly to Sid and the panel, is whether the impact of a Brexit will be evenly spread across all investment sectors, or whether we will witness something where we effectively see a movement in the economy, rather like, I suppose, at the end of the dot-com crash, and when everybody suddenly decided, okay, now we need to get into oil and gas and mining. So are we going to see some sectors benefiting from this disproportionately, while other sectors, and I suspect tech is going to be one of those sectors, which will do badly out of leaving the European Union?
Sid?
I think the initial reaction is anything what we deem as being high beta, where actually financials and tech included, they do correct faster. So that would be the initial reaction. I do think then after that what happens is you get companies, and I tried to give a few examples earlier on, where actually the self-help story or the structural change or some kind of a secular trend, and certainly that's much more true in the tech sector, where if you come out with such a remarkably different proposition, whether it be a product or innovation, that does get rewarded by the market, and you do get credit for it, and those stocks outperform relatively and even in an absolute sense. So I think trying to be too clever and say, well, this sector will do badly and that sector won't, and generalizing, it's much better to look at it on a case-by-case basis.
Rebecca?
Ooh, definitely the financials would do the worst. I think there's also would be a hit to real estate because the demand would go down. Who would benefit? Tough to say if there would be who would be a beneficiary.
All right, let me ask you the final word. I imagine that most times Joe gets the final word anyway. But I'm curious whether in all the work that YouGov has done, and not just for the QCA, but do you get a sense of who are going to be, let's assume there were a Brexit, who would be the winners as well as who would be the losers?
It's extraordinarily difficult to say, because part of the problem that everyone has with regards to Brexit is uncertainty about what it looks like. And until we have an idea of whether a post-Brexit Britain means complete isolationism or the Norway model or something in between, it's very difficult to identify who the winners and the losers will be. I think holding the referendum, generally speaking, in terms of the big losers, will be the political elites. I think having someone...
You're just saying that to encourage us.
No. So having someone who's campaigning to stay when they want to leave and having someone leave when they almost certainly want to stay is not good. And the public can see that, and so I think the big losers are the political elites. And so perhaps longer term, the winners will be the British people.
Under that, that's a happy note on which to finish. Can I thank each of our panelists? Can I thank all of you? Many thanks.